All right, hi guys, welcome to this week's question and answer series episode, and today I am going to be answering how to identify a trend, a market trend. All right, so the market can move in three directions. The market could either go down, the market could go sideways, or the market could be going up. When the market is falling or in a downtrend, we want to be looking for sell entries. It doesn't mean that you can't buy, but if you are buying in a downtrend, it means you are trading against the trend, and it's not recommended for beginner traders. When you have a little bit more experience, fine, you could trade. You might be better at that point at picking your exits, but what you don't want is to be buying long-term in a downtrend. You'd be buying short-term in a downtrend. And when the market is in an uptrend, you want to do the opposite. You want to be buying long-term and selling short-term or not selling at all. When the market is in consolidation or going sideways, that'll be when the market is moving like this, within a range. All right, when the market is moving sideways like this, if you're a beginner trader, you want to stay out. That's your best bet. Or if you have some more experience, once you can identify a clear range, what you want to be doing is selling the top of the range and buying the bottom of the range. And then waiting, the market will come to a point because it will coil, and then the market will come to a point where it will either break out bullish and go up or bearish and go down. All right. So how do you identify a downtrend? A downtrend is defined by the market making lower lows and lower highs. So when the market starts at a high point and falls, all right, and then pulls back up, but that pullback doesn't go past the previous high. So this would have been the previous high right here, this area here. When the market doesn't go past that area and then falls again and makes a lower low, lower than your previous low, and continues doing that, that is when the market is in a downtrend. So if it continues like this, this would be a lower high, lower low, lower high, lower low. This is defined as a downtrend. What can also happen in a downtrend is that the market could make equal highs. So the definition that I like to use is that the market will be making lower lows and lower highs, but also the market can make equal highs. So if the market does this and comes back to this area, this doesn't mean that it's an uptrend. It made an equal high to the previous high and then continued falling. This is still a downtrend, or the market is still trending bearish. The bullish trend is usually identified by higher highs and higher lows. So based on the explanation, push higher than the previous high. When it falls, it doesn't fall all the way down to the previous low. And again, I want to add equal lows still qualify as an uptrend. So until the market actually takes out that low, if we make an equal or a matching low, the trend could still continue as the market moves higher. And consolidation or sideways movement is simply defined as the market moving sideways within a range. All right, this is not always uniform. Like, this is not ideal. You see, when I drew it, I drew where sometimes this happens, because sometimes within the sideways range, the market will break out. That happens from time to time. It's not always picture perfect. I'm using the stick drawings here just to show you all. But as we go to the markets, you'll kind of see what I'm talking about. All right, so let me clear the screen. I've compressed the graph in front of me here. And what we could clearly see is that on the left side, this market was falling. Then the market was going up. Then the market was falling. And then the market was going up. Before I go into the chart, even in that movement, let me change the color and the thickness here so that way you could see it properly. We could see that this drop here was what? In terms of the definition, push down, equal or lower high, equal high, push down, lower high, lower low, lower high, lower low. we would have had some sideways movement here. But if I'm just kind of watching the major, lower high, lower low, lower high, lower low, all the way down to here. At this point, look at this. Lower highs, lower low, lower highs, lower lows, all the way down to here. At this point here, this push up here changed the direction. Remember, for the definition, the market would have had to make a lower high than this previous high or equal high. This push up here made a higher high and then a higher low. It did not come all the way back down here. It didn't take this out. So that is why this market pattern then changed and went up for a little while until what happened again. If this is the low, this is the high. And then what did the market do? The market made a lower low than this low. So that's when you start to watch the market. You're not selling here yet. You're watching the market and you're waiting for a lower high to form. So when the market formed this lower high here, this could have been an area where you'd look for a sell entry. And as you could see, the market continued falling, making lower lows and lower highs up to this point here. And then from here again, what did we do? And the way this one started moving was a bit different. We did not push from right here and take out the previous high that we had the drop from. But we pushed up, we made a lower high. So we could, at this point here, as far as we're concerned, this trend is going to continue because we should expect the market to fall down. And this here is a perfect example of what I tell traders. If every time this market pulled back and made a lower low, you sold, you would have made profit on this 1, 2, 3, 4. This fifth time here, the market did not do what you expected it to do, and you would have gotten stopped out because you would have probably had a stop above here beyond the U-turn, and you got stopped out. This is the perfect example of what I explained. It doesn't matter what strategy you use, no trader will win 100% of the time. If your strategy is good, you will win more times than you lose, but it does not mean that you would not lose. All right, so this example here shows us exactly that if what we did 1, 2, 3, 4, 5 times before worked 5 times, but the 6th time we took a loss, and that's fine, because in these 5 wins you should have made more money than you would have lost here. All right, and once we took that loss, you'd realize, all right, let me see what the market is doing now. The market pushed down, made a higher low than the previous low, and started then going up. So now we should have been looking to buy this market, and this is where the market currently is. So once you understand what you are looking for in a downtrend, you're looking for continuation. You're looking for the market to keep pushing down like this. If you sell here, you would have made money. Sell here, you would have made money. This time that you look to sell, if you were selling and the market does this and you sell, the market from here could then start going up. You'd lose this trade. It doesn't mean that you're a horrible trader. It just means that the market was changing direction and you got stopped out on the move. That's all. All right. So that's basically how you identify a downtrend and an uptrend. In terms of consolidation, what you will do is look for the market moving within a range. And you tend to see consolidation at areas where the market, where the bulls and the bears are going to be battling it out. At areas where they are going to be looking, right, to change direction. So when the bears are coming down like this, and the bulls are trying to get into the market, what you'll see happening, it doesn't just happen like, hey, all right, cool, and you see a shootout. You usually tend to see some sideways movement. It doesn't have to be much sometimes to form a big range, but you tend to see some sideways movement, and then the market breaks out, or then the market breaks out and continues going in the direction. That's how consolidation works. All right, so let me see if I could find an area of consolidation on the market. And I want to find a proper one. I don't just want to show you any one. Well, you know what? Let me go down to the 4-hour time frame. This is recent. So I am seeing levels, don't get me wrong. For instance, this little sideways movement here was a nice consolidation where the market was bouncing between these ranges. So let me go with this area here is a nice one as well. I probably won't start this all the way. I wanted to see if it aligned, but it's really here. And you could see that what the market was doing is going sideways. And then we finally broke out and continued bearish here. So this is what consolidation looks like on the charts. Again, as I said, sometimes you will see it at the reversal. Sometimes you would see it in a trend, like you'll see the market pausing while it continues to go down. So it's something that you look out for, guys. As with practice, you'd be able to identify these trends more. But based on what I shared, we could clearly see uptrend on this side, higher highs, higher lows. This low point here was somewhat of a consolidation, sideways, and then continued pushing up. Continuation of the trend. All right, guys. So that is how you identify a trend, whether it be bullish, bearish, or consolidation, guys. See you all next week. Please, God, guys.